Jeremy from Trading Safely. Good morning, good afternoon, good evening, wherever you are. Got Sean down here with me, coming in from the UK. I think it's 8:30 in the morning there. I'm over in Sydney, Australia on Sunday night, and welcome everyone to the weekly webinar. Look, we're going to spend about, 30 to 40 minutes is what we normally do. Make sure you stick around at the end because we're going to give you guys a opportunity to jump on board with the Trading Safely community. It's been really busy. We're obviously running out of spots. Obviously, we've got some customers that keep us pretty busy, so we're only making a few more spots available. So if you are interested, make sure you jump on board, and we'll sort of bring that to your attention at the end of the webinar today. So maybe just first things first, can everyone hear me? Can someone just come down the chat box and say, yes, Jeremy, I can hear you. That'd be great. Today we're going to have a look at some of the opportunities that came up this week. It was a little bit slow in terms of how many signals that we had. Okay, great. So thanks, Storby. Thanks, Saffron. Was a little bit thin this week on the signals, but that's usually indicative of signals coming up shortly. I mean, we are coming into the end of the month, and typically that's where we start to see markets move because oftentimes the markets will need time to roll over before price can actually go ahead. So, and we see that month on month. In fact, we usually run scans that pick up stocks that are purely based off movements in time. So, although it's been quiet this week, we're looking forward to plenty going on next week. We're certainly at a critical point. We've got the equities sort of breaking out, and Sean's going to touch on this in a little bit. But we do have quite a few new people on board, so welcome. And I think I was just saying to Sean tonight, I'm just going to quickly run through the setups that we use, just so everyone's familiar with what we're referring to, because I know there's lots of new people that have sort of jumped on board. But look, just before that, I'm just going to quickly share screen.
Why do you see in black at the moment? Right, just got a text message from Skype, and his computer's just crashed, so he's going to reboot. I'm not sure whether that means that you can hear me. Just check whether anyone can hear me, and then I'll take over and see whether that works. Sorry? Can you go upstairs really quickly? Yeah, you can, yeah. Okay, right, so I'll carry on. I'll see if I can share my screen. I'm going to be back in a minute, but in the meantime, I'll just do the update on where the markets are themselves. So, you should be able to, right, you should be able to see that. I'll just keep the other one on small. Oh, you're back on. That's quick. Okay. I was sharing. Let me just unshare my screen.
That's excuse me, guys. That's Windows 10 at its best. It just kicked me off. I've honestly got to get on a Mac to stop this problem happening. So apologies for that. I'm just trying to think where I was. Oh, that's right.
Just show
okay, so yeah, that's right. I just wanted to show. So there's a quick disclaimer. I'm just going to restart, so bear with me, guys. It won't be long.
I think just while that's happening, a couple of things about the market, what the market's actually looking at. There's talked about crowd following techniques and how that can happen. And one thing the market's going to be focused on is what's called Bradley-Sidero graph, which is Brad, L-E-Y, and then S-I-D-E-R-O graph.com. It's a free website. It's astrology based, would you believe? And it's all to do with movements of the various planets in relationship to the Earth and the Sun, and I don't know what else. It's free, and for whatever reason, the last year or so, the market likes to focus on it. And so they have different powers of turning points, which can be accelerations or reversals. And it's a very big one, which starts, the first one was actually yesterday when the markets closed. There's another one tomorrow and another one on Tuesday. The last major turning point failed spectacularly, so that you have to be pretty wary of it. I'm far more interested in my own theory, which is markets reverse or accelerate around holidays. So we've just had a holiday, and so it's the end of the month as well. So what we're doing on Monday, Tuesday is pretty important. I said last week that it was difficult to be taking sell signals on individual stocks when the actual indexes themselves are threatening, with all new all-time highs, etc. So you have to be very, very careful about taking short positions. And really what we want to see is some evidence of the market reversing itself and then having a bit more confidence in taking those sells. So there was a couple that were put out during the week, and I'm going to share with them with you a little bit later. But for now, back to you, Jeremy, if your screen share is working.
Yeah, thanks for that. The Bradley dates, it's rare to actually see those Bradley dates with such power, and I know that there's 3 of them all together, so it could be fairly punchy week, and it makes sense coming into the end of the month. Sorry guys, I'm just logging back onto ChartIQ, so there we go. Isn't it? Okay, so quickly for the new subscribers, I'm going to just run through how we set up. I'm just going to share screens. What's it doing? Here we go. Okay, here's oil futures. It's a daily chart up the top here, and we've got the trading safely drop downs here. So for all our new viewers, first thing we want to do is create our multiple time frame support and resistance, so you know where to buy and where to sell, and that comes from this peak term study. So we're just going to add these in, and the beauty of the system is that it references multiple higher time frames, and the support and resistances that are calculated are they're qualified and they're very powerful. So right now what we're doing is dropping in levels where price is likely to reverse. So I'm just going to continue to build up a picture of long-term support and resistance. It's like, if you like, it's like building it's like building a map, really, and price tends to oscillate between the levels, as you can see, and that's why these levels are so powerful. Then we can add in one of our time area studies, and this enables us to really get a handle on how far markets can move and what sort of space that they have. So when we get signals, we can sort of gauge whether a market is range bound or whether it's got a fair bit of room to run. And next thing we can do is add in some of our signals. We've got like 4 different types of signals. There's this UFO pops, and we've got the time continuation signals, and we've also got the bear cage bullwhip signals, and we've also got the slam dunk power play signals. Okay, and finally at the end we have this trade safely, which is the system itself. And what the system's actually doing is just referencing the information that's on the screen in front of you. So all of these buy and sell signals and these levels that you're seeing on the screen are exactly what our system uses to make its decisions. So, we've sort of said this from the start. What the system does, it's not a black box. It's very, very transparent what it does. We try and take sell signals at the lines at resistance, and we take buy signals at support. It's really simple. And then by using the system, then what it does is automate all the exit points for you. So look, and at the bottom, what that's doing is showing you many different time frames and where the confluences of support and resistance are, in addition to the levels that are on the screen in front. So I think from last week we covered off on gold and the dollar index being sort of pretty interesting markets, and certainly nothing's changed there. The dollar index sort of kept going up this week, and look, we're at the end of the month. If it can close up at these levels at the end of the month, it's really going to open up levels that are much higher. And so there's nothing new there. I guess the surprise would be if I'll just go to the dollar index. The surprise would be if we did have a temporary pullback and retest the channel that we've been in for the last 6 months or so. But obviously at the moment it looks like let's just wait for the end of the month, because it's really the end of longer time frames where we see where the market closes will determine what it does. For instance, you might have if you were to look at the daily time frame, you might have a movement in price that spikes high or low intraday, but it can't close there. And it's the same at the end of the month. So you may have a move up, and to sustain that move up, it must close at the end of the period. So you can, on this chart, we see the dollar index going back to the start of 2016, and trading safely has been maintaining. This market's been moving higher for a long time now, and it has taken out the recent highs. Now we just want to see whether it can maintain these levels come Thursday this week, which will be the end of the month. And should that happen, then it will be onwards and upwards for sure, I'd say. The other one we wanted to touch on from last week was gold. Some big levels. I'm actually going to use the spot gold this time. I might even add in trading safely signals. Okay, so we're still on the sell signal from earlier. Well, that looks like a couple of weeks ago, but I think the key point that we made last week was that there's this massive level at 1200, and we wanted to know whether the market would hang on to that level or whether it would hold. obviously on Friday it closed well under the level, so that's indicating that there's a fair bit of weakness. But we look down to chart at the bottom. This is where we're going to find out other levels of support and resistance, and it did hold that low, which is an annual level, this orange line at 1176. So certainly any retest of that level at 1200 that we said last week was a really critical level. Any retest of that and then a failure back under this annual level at 1176 is going to open up much lower. So not looking good for gold at the moment. But having said that, we are at the end of the month, and this is where turning points can come. So to my mind, the dollar index were to have a little pause here and not go on with it, then you may well see gold sort of hold this 1176 level that did on Friday. So really critical this week. Obviously gold's in a bearish position now. We just need to see what happens with the dollar index and whether the market continues in the direction that it's been going, which has sort of been bullish equities, bearish bonds, bullish the dollar index, and bearish metals largely. So
there's one thing on there. Do you want to just call up Dust, which is an ETF?
Yes. Yeah. So
this is just a way of getting involved if you don't want to get involved in the actual metal itself. And this is an ETF, which is what's called a bearish ETF. So if the price of gold goes down, then this will go up. It's been significantly higher. If you look on the left-hand side of the chart, it's been close to 2,000, and now it's trading at around 56. The interesting thing is on that time area where some of the shorter time frames like monthlies and quarterlies have gone below price and created support. And so that's opening up a huge amount of upside, because it acts as, it's going to move 3 times faster than the price of gold. So it's a leveraged way of getting involved. It does mean it can be volatile, but a good way of getting involved is to actually, you can buy options on this ETF. So we're not going to get too much into options today because it's a big subject, but if anyone is interested, they can email us and we'll go through how you would get involved in that via options. An idea would be that you could buy something like a March 80 or 90 call. So that means you'd have exposure until March. And that's going to cost you about $5 or $6 per contract. Gives you exposure to 100 shares, which means it's going to cost you $500 or $600 to buy that option. So if people are interested, send us an email and we can go through it in more detail. But I'm looking to get involved in that area. If we take out 1176 a month end, then my preferred way of getting involved will be with this ETF.
Yeah, and there's also another one called D Gold, which does a similar job. It has an inverse relationship with gold. So when gold goes down, this particular product, D Gold, goes up, and it goes up at 3 times the rate. So it can be very volatile. What's interesting, looking at the study at the bottom, we're sort of tracking lots of time frames there, but we can see right now the orange lines are annual levels. So we've now sort of taken out an annual level. So as Sean just mentioned, look, if that annual midpoint from last year doesn't hold 1176, this D Gold can move very quickly, firstly up to 68.70, and then probably retest last year's midpoint at 77.60. So I think hang on to your hats is the best explanation for gold. It's going to be a fascinating week. I mean, that 1200 level, it took a long time to did a lot of work there. So I'm half expecting it to maybe back test it before lower, but certainly if it started to go back through 1215, then I'm not sure I'd be hanging on to this position for too much longer if I was short. But everything at the moment is indicating that sort of gold weakness is possibly likely to hang around, but let's just see. Back in Australia, this week was pretty quiet. I mean, the markets, the ASX had a bullish finish. It's taken out some levels, that's for sure. But interestingly enough, we didn't get a lot of signals this week. and probably really the ones that we've had just recently was QBE Insurance, which I'll call up. And what we can see on this study is looking at the time area study at the bottom is that price retested the low and it held, and then we took a recent buy signal, and that market has just marched on up, and it's just had moving into resistance as we speak now. Another market that came up was Ski .606. And I might just have to edit these signals. Okay. So it's just running a little slow here for some reason. Okay, there it is there. So what I wanted to point out here was once you become familiar with these studies, and you will over time, the orange lines are annual levels. So at this point where we had our last buy signal, which is a blue arrow over on the right, price had come into double annual supports. And when we see things like that, we obviously get pretty excited, because it means there's much higher time frames involved, and they're the signals that we like to take. And actually, it's probably worth just mentioning now for the new people that are on board, not every signal, we don't use every signal that appears in the program. It's not a black box. We do use some common sense when we look at our signals, and this one in particular was ticked our boxes because it, as I mentioned, it had double annual support. So two very, very high time levels supporting the buy decision. So I like seeing signals like that.
And it's target as well. Hit that monthly target on Friday by the look of it. Very close.
Yep. So gold, looking to test lower, see whether that 1174 holds. If that gives way, then it can drop probably down to 1130, and then even lower down to 1060, and start checking out the previous year's lows, but one day at a time. And the dollar index is the same. We are at the end of the month. It's had an enormous run up. Nothing saying it can't go higher, but let's just see where it closes. I think if it can close above that channel support that we sort of highlighted last week. I did have that chart with the channel support up, but when my computer crashed, I lost it. I apologise. So I might just flick over to Sean now, and I think he wanted to.
Well, you could just call up the charts if you do CUB.
Okay, yeah, sure.
Yeah,
is that American?
Yeah. So this was one that was referenced this week, and talked about it last week as well. And the thing about it was there was a sell. You can see there's actually two sells, but the first one came up last week, and the reason it wouldn't be taken was their results was coming out before the opening on Monday. The results came out, they missed quite badly, and then a little bit surprisingly, the stock actually opened unchanged, and stayed unchanged for about the first 10-15 minutes or so, and then collapsed, as you can see, and produced another sell signal, although risk is blown out considerably by then. So what we've got there was bad news, bad action. It's down 10% on the day, probably a little overdone. So it's now retracing back up. So there was an opportunity early that day, although you would have had to be quick once you knew what the numbers were. After that, then we're still monitoring this because it's sort of just drifting back up again. The next one is DIN, which again was talked about last week. And this was a buy signal that had to get over some resistances, which it did. and then it's just carried on there. You need to switch off the show time area there. Go. No. Should do it then. So that's edged higher with the market. So it's come up. There has been one exit up here already, but as you can see, resistance is a considerable distance away when you're overlaying it on the chart itself. And there's a little area, a semi-annual area at 8809 on the study below. The other study, the other one that came up, which I haven't actually put it out there yet because it came up on Friday, and that is code ROP, P for Peter. And the reason for being interested in this is it's really the third or fourth time that it's come up to this resistance area over the last year. And we're also coming up towards some annual resistances as well. So keeping an eye on it for now. Like to see what the market's going to do. What I'm really interested there is if the market goes down, does this go down? Or if the market goes up, this goes down. So actually its performance on Friday was a little bit disappointing because the market did close on its highs. The other ones that I mentioned before is ITA, which was the things to do with defense and aerospace. And they'd broken up with Trump. And the question was, there was a little bit of a pullback there. It's been a couple of exits, but now it's drifting higher again. So that's still in breakout mode. And if you do XAR, same sort of thing. There's also defense and aerospace. Broke out and has produced a few exits since then. So it's still got to take out that high from where it spiked higher. And really on America, that was pretty much it. The last one I want to just talk about is FCX. This was something that came in from one of our subscribers, Freeport. And what I said last week was it was very much connected with the price of copper, to a certain extent, oil as well. And with copper breaking out, if a little bit overdone, not that weren't interested in taking the short because you're effectively trading copper, you're not necessarily trading the stock. And copper went higher, and surprise, surprise, FCX went higher again. We're at that final monthly level, so it's possible if the market reverses back down that there might be another sell signal appears. I would be watching copper and seeing whether that was doing likewise, and then make a decision from there. So that's pretty much it on stateside. I suppose the only other one was Netflix, NFLX. And tech's been underperforming, so Google, Amazon, Facebook have all been pretty poor. There was a buy signal. You can see market broke out on its results a month or so ago, went up to that final resistance, stopped, and now it's come back down to the support point of that breakout. It's given us a minor buy signal and has edged higher. So it's one I'm watching as well. I think if you do Apple, AAPL, the biggest stock in the NASDAQ, I think still, along with Google. And what's interesting about Apple is it broke that red line, so where that number 3 was, came back down, and now it's retesting, which is a major resistance level at around 112 to 112.50. If you look at the study below, there's actually quite a lot of noise there, isn't there? There's some semi-annuals, quarterlies above. So I'm watching Apple. If we have a down day, there's a chance that a sell signal is going to appear, which I would be very interested in. I think, well, we've talked about fashion and fashionable and unfashionable. I'm no expert on mobile phones, I have to admit. I'd still have a Nokia brick if I had my way, but Google are bringing out a new phone. Is that right? You know a bit more about this, Jeremy, or? just as ignorant of me about them.
I'm on the iPhone, so actually,
He's on the iPhone.
I think I need to ask my younger brother about that one.
I think, well, one of my techie friends said to me, "Oh, there's a new Google phone. I can't wait to get it." But it's Google. I think it's Google manufactured all the weather, and I think that has potentially a lot of implications. Google runs on Android, I think, and all that sort of stuff. So I suppose I just don't like Apple as a stock. They have vast amounts of money and they don't do anything with it. And all their revenue, the vast majority of their revenue is in one place, which is the phone. So I'm watching that very, very closely. If people want to talk about options there's also a thing called what are called leaps, which is an acronym, so I've got no idea what it stands for. But it enables you to buy like 2 or 3 year options. So I was actually looking at 2-year 70 puts the other day. They cost like 50 cents. Now that's a long way away, but if you look at it, this stock was trading at $90 earlier on in the year. So an $80 or $70 put with 2 years to go isn't beyond the bounds of possibility. And at 50 cents to go, you get 100 shares for $50. So in theory, you can actually put quite a chunky position on there. So if there is a sell on Apple, I would look to short the stock, and I would also look to probably buy some of those long-term options because they are so cheap. So that's what I'm looking at this week.
Actually, it just reminded me of, I did run some scans this morning. I forgot to call this one up, but the Commonwealth Bank in Australia, it's a little bit interesting. It'd be interesting to see what you thought of it, Sean. The Commonwealth Bank of Australia is one of the largest stocks on the ASX 200 in Australia. I might even just remove some of these other signals that are there that I called up for illustrative purposes. So what we were trying to show by adding all these other signals was just that the signals that the system actually uses are signals that occur at support and resistance, which is what you're looking at now. So yeah, Commonwealth Bank's interesting. It's been range bound for pretty much the whole year. So that tells me there is a decent move coming in this. It is a large part of the Australian index, and it's been hovering around the lows, trying to break through it on numerous occasions now. I mean, if I look from left to right, there's been 1, 2, 3, 4, now 5. There's been 5 pokes at the low, and to the upside there's been now 4. So you've got to think that there's going to be a breakout or breakdown here imminently. And right now we're back at final resistance. Sean, what do you think here?
Well, you work on the premise that it'll continue to rotate, having done it for a while. So it is a valid sell signal in my mind, and your risk is pretty low. You initially look for it to rotate back down below the lows, down to the lows again. But if we get a breakout, you would definitely take it. Absolutely no doubt about that. The longer something goes sideways, what it's doing is it's building up energy, storing it all up. And so when a breakout occurs, whichever way it is, then you want to go with it. Absolutely no doubt about that. So
you can think of it like shaking a can of Coke. That's what's been going on this year. And once the lid pops, then this is going to explode up or explode down. Let's just wait and see. But right now, it's got a valid sell signal on it. So these are the signals that we like to take. It's been fairly well behaved for most of this year. And just for those people that are tuning in for the first time, you may be wondering what the little numbers are, the green numbers and the red numbers, just to explain it there. Profit taking points again. So when we take a buy signal, then we use the red numbers to exit a quarter of our position. And when we take on a sell signal, we use the green numbers to sell out a quarter of our position. So yeah, right now there's a pretty well defined stop there around $78 on Commonwealth Bank. Stops up at 82.08. And we only ever want to lose 1%. So don't ever risk too much when you invest. I would think what else. I mean, look, guys. Look, if you want to get involved with trading safely, we do have a few spots still left. The best way to probably get in touch with us is via email on help@tradingsafely.com.au, or even if you just want to ring up and have a chat, we can have a free consultation where we can just discuss what it is that we do. And look, I'll just put those details into the chat box if I can. Actually, here we go. So if you do want to jump on board, it's help@tradingsafely.com.au. There's that. And if you do want to chat about getting on board, I'll just put in our company phone number. And just to remind people that are listening for the first time, we did take on some trading apprentices with little or no experience, and over the 5 weeks that we worked with them, they got 7%, 7%, and it was 3%. We're possibly looking to do that again, so stay tuned. We might go down that path again. We'll just have to see. It looks like I've lost my capacity to answer questions at the moment, just courtesy of the system crashing on me. But Sean, can you see questions? Have you got access to?
There's no fresh questions. I get people who could hear okay, so I can see that. But there's no extra questions. I think markets just reverse or accelerate around holidays. So Monday, Tuesday, pretty important. Is month end Wednesday, is it? I'm trying to think what 30 days.
Yeah, Thursday, I think.
Maybe it's
Wednesday, Thursday. Yep.
Yeah, so the last day of the month is 29th. So we have a lot of monthly levels will fit some support to resistance. I suppose just actually there's one I forgot, which was ODP. Do you just want to call that one up? It's one we talked about sectors and the fact that we're interested in the ones at the bottom and the ones at the top. ODP, the market's been going up, so not surprisingly, ODP has sort of drifted high as well, but it's getting very, very close to its first major target, which is at $5. So performing very well, and looking like there's a chance that it will give us partial profit points. So should be some more action this week. We'll have to see how we get on.
I might just, we did say in the email that we sort of cover off on some of the equity levels, so I might just turn off these signals for a tick and just concentrate on the levels. So if we were to look at, I don't know, what do we want to look at? If people want to see particular levels on indexes, just shout out, but I might just put up the S&P 500 for starters, the futures. And the beautiful thing about the program is that you get all these levels sort of automated for you, and you know instantly when you're right or wrong. So, look, major levels have been broken on the S&P. To my mind, that there's major supports around the 2120 area, and obviously we've taken out this critical level, which was what was that one there? 2190 odd. Yep.
Dow's done the same thing.
Yes, it has. So this is a really important level down here around this 2110 to 2120 area on the S&P. Should that sort of close under there, then you're going to obviously open up a fair bit lower. You can see the gap there. If I go to the Dow, Indexes. So this is the cash index and the Dow. It's also charging higher, but it's got major support. It looks like a confluence of levels around this. Well, the major one's actually that annual level down there at 17,400 or 17,300. But then along the way, there's a major level around 18,000. But looks to be in trouble under 17.3. But at the moment, it's nothing but bullish. And as you can see, however, this week is the end of the month, so we can expect the possibility of a turning point. So stay tuned. I think we covered gold. Are there any other levels that people want to, if you've got?
If you do IWO,
yeah.
It's just it tracks the Russell, which is the small stocks, and that's just rocketing. It's just marching higher. So small caps, it's interesting because small caps are leading, and then the real big caps down is the next one. Then the S&P and the Nasdaq is actually last.
You'd have to think, Sean, like if we were to close the end of the year above here, then this thing's looking like it could just go crazy up.
Yeah, well, there's nothing there. One of the things that happens with markets when they, especially indexes, is nobody has anything to hang on to, and so it tends to overshoot on the upside because nobody they've got no reference points, and the market will start saying things about, oh, the stochastic is overbought, which is nonsense. It can stay overbought for months, and things like that. And so what you get is little minor one-day reversals where everyone thinks it's there, or they might get a candlestick pattern like a doji or something, and everyone goes, oh yeah, that's it, and then bang, it just goes again. So don't stand in front of the truck. That's really, really important, one of my sayings. And at the moment, the truck is going up the hill, and we don't want to stand in front of it until it shows some real evidence that it's willing to turn around.
Yeah, and it's probably worth noting just more broadly, Sean, with the bond market collapsing off the recent highs, and just the pure amount of money that's in those bond markets, it's much, much, much bigger than than all the global equity markets combined. In fact, it's something like 3 times as much, and those bond markets have been collapsing. So you can only think that perhaps money is falling out of bonds and into equities, particularly American equities, and to do that, they have to buy the US dollar first. So
yeah,
there's definitely some connections here. Bonds down, currencies, the US dollar up, and equities up. So just keep an eye on that one. Okay, well, so Sean, can you see if there's any more questions from the people that
no,
okay.
nothing there, so we might as well wrap up.
Yeah, so look, feel free to get in touch with us if you are interested. Look, the great thing is that you can get, if you register with us, just contact us via email. But if you want to join and you register with us, then you get 2 months free. If you take out a demo account, which you can do, and you place your positions on the demo account with one of the CFD providers, it basically means that there is no risk because you're not using your own money. And we're able to give you a 2-month trial where you do access what it is that we do. And, our trading apprentices that we worked with for 5 to 6 weeks make good returns, and you have the opportunity of seeing how that goes for you, and if needs be on a demo account. So it'd be great to work with you, and there are only limited spots, so just reach out to us if you'd like to get on board. But for those people that have joined the webinar tonight. Thanks for coming on, and we're going to see you next week for the next instalment. So dying to see what happens to gold and the dollar index, basically. I think the dollar index, to my mind, is probably the driving force in a lot of this stuff. Sean, what are you looking forward to this week?
Well, I'm in the dollar index pretty big. I'm also in long dollar against the yen, short euro against the pound, currency-wise. Gold, I'm very interested in. I will be looking at getting involved there. Apple, if it gives a signal. So they're my primary focuses, and then see what comes up through the week, because could be some new opportunities. Really, I suppose if I'm looking for a sell signal in an individual stock, my primary idea would be that it's not at its all-time high or something like the market is. So it might be coming up to a secondary high. So something like that, and that would interest me on the short side of an individual stock. If we do pull back, something that comes back to its original breakout point, so like Netflix, so goes higher, retraces back down, comes back to the breakout point, and gives a buy signal. So I'll be happy to take that as well, really. So that's really where I'm at. So I think the dollar is very important. I don't really make any secret of it. On the very long term, I'm pretty bullish on it. I find it difficult to see what's going to get in the way of it. I also think some other currencies are actually fundamentally weak. So the euro, for whatever reason, the pound, the yen, definitely. So you actually got a double whammy. There's reasons for buying the dollar, which makes sense, and also interest rate differentials. And there's also reasons to sell the other currencies, which actually means that the moves can be pretty spectacular. Certainly the yen over the last 3 weeks has moved massively, and the people on the professional commentary have been involved in that, and doesn't appear to be any end in sight there. It's probably a little bit overdone, but I think there's some major trends, structural trends in place on currencies, and they should continue for some time. So that's what I'm waiting for, and then we'll just see what comes up on the scans on individual stocks and get involved accordingly.
Yeah. Well, it is the end of the month. We've been harping on about it. So for all the subscribers, we should get a fair bit of action this week, I think. And to my mind, it's going to be all about whether the dollar index can just hang about at this level, and if it does, then it's going to be off to the races, and if it doesn't, then it's probably going to be just a little bit more sideways before it eventually breaks out. But because there's people that have been borrowing US dollars for the last well, I'm not sure how many years that the Fed's been printing money, but people have been borrowing US dollars at 0% interest for a long time now, and the thought of interest rates rising and the $12 trillion that have been borrowed in US dollars being paid back, it just to my mind adds to the potential velocity of the US dollar move when the shorts out there try and get the US dollars back. So stay tuned.
Okay. All right. Well, thanks very much, everyone, and we'll see you all next week.
Yep. See you next week, everyone. Have a great week, and remember to trade safely. Thanks, guys.